did not trade today, but I want to look at the order book. One of the reasons we don't trade is sloppy price action. Sometimes difficult to capture the trades on the day. The market can be significantly different on Fed day, and so instead of trying to capture the tone of the Fed day, it shows that it's better to sit out. But what is this market depth total indicator? What does this tell us? And so the blue sums up the total number of bids. The purple sums up the total number of offers. Looking at the Nasdaq, this is as you go throughout the day, as you go into the Fed meeting, you can see it's around 82 contracts, 82 bids, and 82 offers. And then as you go towards 2 o'clock, where they're going to release the FOMC policy statement, and as you go through the press conference, that number drops to around 30, 25 to 30. So it's about half as much as it is pre-Fed. So pre-Fed, it's 80 or so, and then at half that, and it doesn't ever recover though. That's the thing that I wanted to look at today. You get the policy statement, pre-policy, 10 minutes before the policy statement, it drops. You get the policy statement, and it doesn't pick back up. It just stays down for the press conference. The press conference is over. It stays down. So the tone of the market just isn't. It's just not that interested. S&P, same thing. Much thicker liquidity on the S&P. The S&P. The order book is around 1,000 bids and 1,000 offers. And then 10 minutes before we go into the FOMC policy statement, that starts to drop, and then right at when the policy statement is released, that number is less than is around 100, and I guess it's around 100 to 200. And then throughout the afternoon, it never recovers. It stays in this 450 range, much more liquid than the Nasdaq, but about half as much as it was early this morning before the Federal Reserve statement. Let's look at energies and metals. So the energy is not as affected as much as crude oil. It drops, and then the policy statement comes out, and you don't see the biggest. It's lower than it is earlier in the day. It's 263 there, and it's 165 here. But crude oil typically closes at 230. The old pit session closes at 230. So it goes into this increases into the close, and then the official day session for crude oil is 2:30 Eastern time. And so let's look at natural gas. You can't see much difference in natural gas. It kind of has this early morning, has more activity, and then it drops. This natural gas drops off down to 250 at around noon, and then it just kind of stays at that level. Gold and silver, they are more like financials. They're here. 10 minutes before the Fed meeting, it drops, and it's about half the value. This is gold. This is about half the value as it was earlier in the day. Silver, same thing. Silver was around 280, I guess. And then in the afternoon, it's around 170, 160. And so certainly you can see the drop-off into the policy statement. Almost to zero down here for silver. Silver is more thinly traded, and so, but it never recovers. The silver, gold, S&P, Nasdaq never recover to the early morning market depth total numbers that we saw. So I think that's interesting. It would be neat to backtest this, backtest your strategies, and say only trade if the market depth total meets a certain threshold. Only problem is market depth data is not saved historically. So it would be hard to do that, to backtest that and implement that, unless you had some historical data, saved historical data or purchased historical data to know what the market depth total was and how incremental changes would affect it. If it's 90% or 80% or 70% or 60% of its average value during the day, should you stop at what threshold? Does that make it? Does it improve the strategy to stop trading once the market depth total drops to a certain threshold of its 10-day average maybe? So that's an interesting point I wanted to share with you on this Fed day. You can clearly see market depth total differences on days like FOMC day and today was no exception. And you know, the less liquidity in the market, the more the market can get pushed around. So it was pushed up and pushed down, and then kind of closed where it started, the FOMC meeting announcement. So that is what we wanted to share with you today. We did not trade. Today we don't trade on FOMC. It would have been sloppy had we traded. And so that's the video I want to make for today on FOMC on May the 1st, 2024.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.